Good morning, everybody. This is Eureka John and Eureka Street Crypto Hub, broadcasting live this morning on Theta TV from Leander, Texas. And it is May 24th, 2021 at 5:50 in the morning. And welcome to my show. This is my video blog, and this is just me documenting my progress daily on things that I learn in the crypto space. I like to document it because it just kind of keeps me accountable to learning something new every single day, and it gives me a kick in the butt to make sure I have something to talk about. And this morning I don't really have anything to talk about, honestly. I kind of had a low-key day yesterday, very much needed with being sick and everything else. But I still stayed up a little late last night and did read a few articles, just enough to be able to talk about. Wanted to take a little break from all the atomic swaps and atomic decks and everything. I've been really intensely studying that for a little while now. Anyway, so let's go to CoinGecko and see what's up. Alright, let me refresh this page. Okay, so Bitcoin's still moving between $35,000 and $40,000. Everybody all over Twitter and stuff are just, some people are just completely wrecked, so leveraged out on all this stuff, and this is lesson learned, man. This is crypto. You get in and you be careful. Don't try to trade this market like the stock market, because it's not the stock market, and it will humble you real quick. So just take note. If this is your first crash, then congratulations if you've made it through, and then now you know. All right, I think that we're on the other side of this. I'd be surprised if I did see another major crash on top of this one, but I think we're on the other side. So so Bitcoin is 36,000, Ethereum is 2,246.04. Tether sitting at number 3 now. No other real spot, and that's because a lot of people have okay, so it's at 99 cents. That means Tether's in high demand. A lot of people have been buying Tether and selling their positions. Okay, Cardano $1.43, Binance $2.90.15. If you like Binance and Binance Smart Chain and all the stuff on the Binance network over there, this is a bargain for you. Dogecoin 31 cents. I would never say Dogecoin's a bargain because I don't like Dogecoin. Dogecoin's a meme coin. It's not meant to be in the top 10. It has no fundamentals. It's only there because of pure hype and speculation and moon boys. And moon boys are people that just constantly hype a project, trying to pump it up and pump it up and pump it up so they can speculate and make a little dough. They're not there for the tech. They don't care about anything like that. And they don't care about the future of crypto. All they care about is getting their Lamborghini, their Lambo. So, and they're constantly asking when moon, when moon, when moon. So that's a moon boy in the crypto world. And Dogecoin is full of moon boys. Same thing with SHIB token and Safe Moon and all that stuff. XRP 84 cents. USD coin 99 cents. Polkadot, that's stablecoin or Tether and USD coin. Polkadot 1952. ICP Insane Clown Posse. Whatever, man. I don't. Bitcoin Cash 611.40. Litecoin 157.41. Chainlink 23.14. Okay, I forgot that I was I'm slightly leveraged in Chainlink. I took out a loan on Celsius to help with my car payment, and whenever I first bought my car, and also just to try out the Celsius platform, and I leveraged out on some. I borrowed against some Chainlink as collateral. And so if it drops below $9 and something cents, then it gets liquidated. And for a little bit there, it got a little frighteningly close. Let's see where it got to. And I completely forgot about it until yesterday. And I was like, oh crap, I could get liquidated on this. So yeah, I had my own little scare. So I'm not immune to all this stuff either. I'm not Mr. Holier than thou, dollar cost average guy. Even though that is what I do, but yeah, I'm not any better than anybody else or any. So I'm not here to judge. Basically, is what I'm trying to say. All right, so where did it get to yesterday? It got down to 1573. I feel like it got lower than that, but maybe it didn't. Let's check the 7-day average here, or the 7-day stats. I don't know. Okay, so yeah, it got down to 15 something, but still, that's a little too close for comfort, whenever you have something leveraged out like that. Okay. I mean, I guess the worst that would happen is they would pull out, the Chainlink tokens that I owe and close the loan, and it is what it is. But it's not the way I would want to end the loan. Oh wait, why did I close out and go to my mail? Okay, so Uniswap 1904, Stellar 41 cents, Binance, it's a stable coin. Polygon $1.40. So it looks like things like Polygon and Cardano and XRP even slightly are starting to recover a little bit. Solana 2803 would be a bargain. I've been hearing a lot about Solana lately. The Defiant did a video about Solana. There's been articles about Solana, about its scalability, about its interoperability, its transaction speed. I don't use the word Ethereum killer, but this could be some good competition for Ethereum. So I'll keep an eye on this, and I'll probably do a video that covers Solana specifically. Theta Network, $6.23 down here. This is a bargain because Theta has some amazing stuff right on the horizon here. Just this next month, we're coming out with Theta 3.0. It's been in collaboration with Samsung. People have seen Theta Network being installed in Samsung TVs. I mean, this is the beginning of something that is just about to go off the chain. So, I mean, my biggest investments are Bitcoin, Ethereum, Theta, and Chainlink, and for good reason, because they all four have, Bitcoin and Ethereum for obvious reasons, but Chainlink and Theta because they are spring-loaded and ready to go. If you watch my show, you always see me giving little updates here and there on Chainlink and Theta and reasons why I believe this. So yeah. Okay, so anyway, I was just thumbing through some articles, and let's see here. Where is this article? The Defiant, during all this crash, hold on, not that one. DeFi outperforms post-crash as on-chain indicators remain strong. Okay, so DeFi protocols, the crash didn't really hit them as hard because I think a lot of people were using DeFi trying to shuffle things around. So following the biggest crash since Black Thursday, DeFi protocols have managed to withstand major headwinds and liquidations. While DeFi tokens dropped significantly along with the rest of the market, they sustained above their lows relative to Ethereum and still managed to grow in-key on-chain metrics. DeFi Pulse Index dropped 50% versus Ethereum from March to early May. Since then, we've already seen a reversal over the past few weeks, with DPI rebounding over 30%, with on-chain activity turning bullish for DeFi. The recent price increase in DPI comes at a critical price area around 0.13 ETH. Zooming out, we observe that this price was previous support for the index, potentially making this a double bottom for DPI in Ether terms. On-chain will see a strong reversal in the net flows of DPI on Uniswap version 2. Net flows in this case refers to the inflows entering in Uniswap minus the outflows for a particular token. So since traders remove liquidity from a trading pair, negative net flows for an asset point to high demand for it relative to the other asset. Let's see here. So DPI, Uniswap 7-day net flow, DPI price index. I'm not sure I really understand that graph, to be honest. Anyway, but they're basically saying that DeFi didn't get hit as hard. Let's go to DeFi Pulse here real quick. And if you don't know what DeFi Pulse is, Yeah, I'll be honest with you. I don't understand, a lot of these graphs and a lot of this terminology still to this point. So that's why I do this show. So I'm continuously learning. So yeah. DeFi Pulse is a great site to kind of learn about and keep track of what's going on in the DeFi world. So this is the total value locked in DeFi, and by locked I mean when people lock up their DeFi and they borrow against it, either to leverage themselves out so they have more buying power to lock what they borrowed up against into something else, and then they're earning double yield, and then maybe sometimes they might even go 3 or 4 levels deep in that and keep borrowing against what they're pulling out. And that's called being leveraged and over leveraged, if you will, is whenever you go a little too far with it. Right here, you see right about, we had a max May 11th and May 14th, a max of total value locked into DeFi protocols is $86.776 billion. That's a lot of money. And then you had coming right up here during this crash, bam, suddenly everything drops because everybody's getting liquidated. That means when you have something locked up on a DeFi protocol, say Maker or Aave or Compound or something like that, you have, let's say you have some stable coins like DAI locked up in there. Well, DAI not so much. Okay, say you locked up some Ethereum, okay, and the value of that Ethereum drops, and it might send you, it depends on the protocol, it might send you a warning email saying, hey, the value of your token is dropping, you might want to go ahead and put some more collateral in. Or it might not send you an email and it just liquidates you, and it uses the assets that you have locked up to pay off the loan, and those assets that you have locked up may not have been what you wanted to have paid off the loan with. And if you're several levels deep, then you're pretty much screwed. So here you can see that's a lot of liquidations. And so a lot of people that were in the market for pure speculation and gambling basically got liquidated, and they got the boot. That's the beautiful thing about this crypto market, is it will in a way self-regulate. And it hasn't really been at this point since last April. I guess last month. But for some reason, things just started getting locked up, and the optimism and the greed in the market on the fear and greed index got really, really high. And the market was like, no sir. So let's check this out. Fear and greed index. Let's take a look at that, and so you can kind of learn what that is, and so I can take a look at it as well, because I've never actually really looked it up. Fear and greed index, investor sentiment. Let's try this one. Okay. Crypto fear and greed index. Each day we analyze emotions and sentiments from different sources and crunch them into one simple number. The fear and greed index for Bitcoin and other large cryptocurrencies. Bitcoin right now, it's extreme fear. So yeah. So crypto fear and greed index over time. This is a plot of the fear and greed index over time, where value of 0 means extreme fear and a value of 100 means extreme greed. So let's see here. Yeah, it corresponds to this other graph over here on DeFi Pulse, where we were really high right here, and there's a lot of euphoria going on, and the greed index was pretty high, up above 70, 73, and then now here we are down at the fear of 10. And look over here how much liquidations have happened. Bam! And there's a little bounce. Bink. So let's scroll down and see what else we have on this page. Why measure fear and greed? The crypto market behavior is very emotional. People tend to get greedy when the market is rising, which results in FOMO, fear of missing out. Also, people often sell their coins, an irrational reaction of seeing red numbers. With our fear, and this is when you should be holding on. I mean, I actually bought, I bought some Ethereum, I bought some Theta token, I bought a little bit of Chainlink. So, with our fear, that's what you should be doing, right? With our fear and greed index, we try to save you from your own emotional overreactions. And you buy because you are sure that this was only temporary, and so you're getting a deal, and you know that you're going to get a return on your investment in the longer picture of things. Even though temporarily, even right after you buy, you might see a loss. Okay, so investors are getting too greedy. That means the market is due for a correction. Therefore, we analyze the current sentiment of the Bitcoin market and crunch the numbers into a simple meter from 0 to 100. 0 means extreme fear, while 100 means extreme greed. Data sources. They're gathering from 5 sources. So let's list all the different factors, including the volatility. We're measuring the current volatility and max drawdowns of Bitcoin. Market momentum / volume. Okay. Social media. So while our Reddit sentiment analysis is still not in the live index, we're experimenting with some market-related keywords in the text processing algorithm. Our Twitter analysis is running, so they gather and count posts on various hashtags for each coin. Publicly, we show only those for Bitcoin and check how fast and how many interactions they receive in certain time frames. An unusual high interaction rate results in a growing public interest in the coin, and in our eyes corresponds to greedy market behavior. Okay. Surveys. Okay. Straw poll. Okay. I've never seen straw poll. Quite a large public polling platform. Yeah, so large. I've never heard of it. But then again, who am I? We're conducting weekly crypto polls and ask people how they see the market. Usually we're seeing 2,000 to 3,000 votes on each poll. So they do get a picture of the sentiment of the group of investors. I guess from the type of person that would take the straw poll. Dominance. The dominance of coin resembles the market cap share of the whole crypto market, especially for Bitcoin. We think that a rise in Bitcoin dominance is caused by a fear of, and thus a reduction of, too speculative altcoin investments. Since Bitcoin is becoming more and more the safe haven of crypto. On the other side, when Bitcoin dominance shrinks, people are getting more greedy by investing in more risky altcoins, dreaming of their chance in the next bull run. That's true. I love altcoins, but at the same time, it can feel a little greedy sometimes. Feels a little bit like looking at that dirty magazine. So you're just kind of like, oh. We pull trends. Google Trends data for various Bitcoin-related search queries and crunch those numbers, especially with the change of search volumes as well as recommended other currently popular searches. All right, so let's check out Bitcoin dominance here real quick. Let's go into Bitcoin and see. Oh, it was right there at the top. Dominance: Bitcoin 43%, Ethereum 16.8. Where can I find kind of a graph of Bitcoin market cap dominance? 43, but is that in compared to what? So let's see here. There's nothing I can go to find. So let's find a Bitcoin dominance graph. Bitcoin at Bitcoin. Bitcoin dominance graph. I'm gonna see here. Trading View, Crypto Chart. I don't like to go to the sponsored links. They should know that. Like everybody always skips over sponsored links, so they should. Okay, so Bitcoin. I know it's probably on CoinGecko somewhere. I just don't know where it is. All right, so total market cap excluding Bitcoin. Where's Bitcoin dominance? Okay, total percentage of. Oh, jeez. Percentage of total market capitalization. Dominance. Okay, so Bitcoin. Wow. So July 2017, Bitcoin dominance. That's whenever this crash happened, and altcoins were raging at an all-time high back then. So Bitcoin dominance dropped right here, right before this crash. And let's see. Let's go to 3 months, not all time. So Bitcoin dominance dropped right before all this happened, and then it spiked up during this crash, and then it's gone up since then. People are like, oh, maybe I shouldn't have jumped into that weird Shiba Inu coin think I'll pull back into and go back into Bitcoin where it's a little safe. Yeah. But overall, you can kind of see an overall trend of Bitcoin dominance, kind of lowering. And as crypto technology develops and you get amazing products out there like Theta Network and Chainlink and Ethereum has DeFi built on it. You have things like Ocean Protocol, AGI, the Artificial Intelligence Marketplace. A lot of interesting applications that go beyond just finance and transactions and stuff like that. And things like Polkadot building up an entire ecosystem, and Cardano building up. So, a lot of other things brewing is now kind of taking Bitcoin out of the dominant position. And here's the 50% dominant line right here, and you can see, so I guess since end of April, so the entire month of May, Bitcoin has not been the dominant cryptocurrency. Let's look all time here, just again real quick. So we have Bitcoin for the longest time up until 2017. Bitcoin dominance was 80%, and then it dropped down way far for a while. Bitcoin was in the toilet basically for a while, and altcoins were in there trying to sneak in and take their peak. And so a bunch of others, and then you had Ethereum, which was running pretty high in 2018, and then everything dropped down for a little while. Bitcoin went back up and it settled down. This is about when I got into it, right around here, about right there, about mid-January, mid 2018. Interesting. Anyway, just interesting things to ponder. I've never really looked at Bitcoin dominance, and I've never really looked at this fear and greed index. I guess you can share and embed it on your website if you want to, have a constant look at it. Then you can install it on your iOS. Okay, copy widget code to clipboard. Interesting. Okay, I'm gonna have to go ahead and install that on my iPhone. Cool. All right, well, I'm going to bookmark this page. So if you want to install the Fear and Greed Index on your iPhone, looks like you can do it right here. Since iOS 14 widgets are available, and that is great, with the scriptable apps, it is possible to create standalone widgets without the need to create a corresponding app. This makes it easy to create widgets for any topic or content. We've created a widget for the Fear and Greed Index so you can always keep track of the current market situation. How to install? Use the widget. To use the widget, you first need to install the free scriptable app from scriptable.app. Okay. All right, so I'm going to bookmark this. I'm going to share this link in the notes. I don't, honestly, I'm hoping this is legit. I mean, it looks legit to me, so I'll go ahead and share the link, but just know that I'm not like 100% backing the site or anything. So if something screws up, it's not my fault. I'm just... I'm going to install it on my phone and hopefully everything works out. All right. Without going too more... Okay, let's take another quick look at DeFi Pulse over here. Got all these DeFi protocols. Look at all this. This is a lot of DeFi protocols, and this is probably not even near all of them. This is just what shows up. And I found this one yesterday, 88 miles per hour, when I was reading an article on DeFi Insurance. I just thought it looked pretty interesting. 88 miles per hour, obviously referencing, well, not obviously to some people, but referencing Back to the Future. You have to go to 88 miles per hour in the DeLorean to make time travel possible, because that's when the flux capacitor gets activated at 88 miles per hour, and then it opens the portal for time travel to happen. And basically right here, this is what this DeFi protocol is insinuating, that you can lock up your stable coins and you can earn a fixed APY, and then you can earn APY of the MPH token, the miles per hour token. And I'm not really sure how much better or worse or different it is from other DeFi protocols. They all kind of start to blend together to me. So I'll have to dig a little deeper. I started going through some of the documents yesterday. It looks, looks pretty interesting. I mean, at least it has flashy graphics, and sometimes that's all that matters, right? I mean, I've bought skateboards purely alone for the graphics, and so it's very tempting sometimes to just jump into DeFi protocols because you love the graphics. So yeah, I'm guilty. Although I've never had enough money to just throw around and put into DeFi protocols just because of graphics. But the article that I was reading, I think this might have been it, insurance.io, and they were talking about InsurAce full spectrum multi-chain insurance services, and it was talking about insurance on DeFi and the need for insurance with DeFi. I'm naturally skeptical of any type of insurance. I think insurance is a racket. But it's just like indulgences of the Catholic Church in the medieval times. You buy, your indulgences to save your soul, protect your soul from hell and eternal banishment, when really indulgences were indicators, virtue signaling is basically virtue signaling of the medieval times. And anyway, this insurance here, and also to insure your wealth and stuff like that during volatile times as well, and to make sure that your crops and wealth wouldn't be confiscated. But this insurance, I guess, kind of has some practical purposes, because during with all this volatility and this unpredictability in the DeFi world and all these smart contract hacks, Oracle hacks and whatnot, you could have your money locked up in a DeFi protocol such as like 88 miles an hour because you loved the graphics, and then suddenly it might have some kind of smart contract hack and it gets drained of money and you lose $100,000. So let's say here you deposit 100K of DAI at 2.6% fixed APY. All right, so I would go into here, I would deposit 100K of DAI, add at this, and here it'd be 3.58% APY. All right, so let's go back over here. And then 43% staking rewards. That would come from the MPH staking rewards. Okay, so this is at 12.836. Okay, whatever. That doesn't add up. But either way, you get the drift. Buy an InsurAce cover at 8% premium. 8%, that still seems a little high, but earn 2.6K interest on that $100,000. So you're automatically earning 2.6K interest, and then earn 43K interest of MPH, the net APR from staking the MPH. Result, 100,000 minus 8,000 for the insurance in case anything goes wrong, plus 2.6K for the APY off the 100K, and then plus 43K for the staking rewards from the MPH. And you'll end up fully insured with 137.6K initial capital, fully insured against smart contracts risk. So if you have $100,000 laying around, I don't, but if I did and I were wanting to make that money work for me, I could lock it up on this protocol here, and I could earn some really good interest. Right now the rates don't seem to be 43% the staking APY as before. So let's see here. Annualized temporary MPH reward weight. Depositors need to pay back most of the temporary MPH reward received when they withdraw. I don't really understand that. But either way, yeah, I mean, I'd have to look deeper into this protocol. But according to this, if you had $100,000 laying around, you could end up by the end of year with 137.6K $1,000. So with 37.6 thousand profits, fully insured in case anything happens, you'll get that 100,000 back. So it's not such a bad deal, I guess, if it's fully insured, because if I had $100,000, I would I'd be a little hesitant to lock it up on some kind of DeFi protocol like this. I mean, even though the graphics are really cool, I'd still be a little hesitant. I guess insurance would help out here. So I don't want to be too much of a skeptic all the time. These new multi-chain insurance services will be available to a hand-picked selection of protocols on each chain to begin with. Some notable projects include Binance Smart Chain, Hecko, I don't know Hecko, Solana, Ethereum, and Radium. Okay, I have to check out these Solana DeFi protocols. Polygon, Aave version 2, Curve and Quick, and Phantom, Spirit Swap, and Spooky Swap. Okay, so some interesting stuff. And then obviously well, not obviously, but there are the more well-known ones, such as like Nexus Mutual, Nexus Mutual, and that's get covered against smart contract failure, and Nexus Mutual is right here, and allows people to insure themselves against smart contract failure and stuff like that. That's one of the more well-known ones. I've never really looked into it just because I've never really had enough money to worry about like being insured by this stuff. And I'm just starting out, folks, with my whole nest egg, so I don't really have enough to worry about being insured right now. I'm just learning all the levers and pulleys here. Hopefully one day I will have enough to lock up and be insurable and be able to like seriously inquire to this kind of product. But that's not in the cards for me right now. That being said, I've wasted 31 minutes now, so that's pretty amazing. I came in here with not really much to talk about and ended up just rambling on. So that's kind of what I do. I can talk to a wall. My wife just loves it when I just sit here and just ramble on to her about crypto. Oh man. All right, so that being said, I'll leave on this pretty screen over here, this 88 miles per hour app. I like this. I like the graphics. I like the concept. Good work, guys. Way to appeal to Gen Xers. All right. Well, I will talk to you guys tomorrow. All right. Bye.